Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on MOND. We like the delisting, there's no more earnings, and the CEO knows when to step down. This is a buy.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. Johnny, how are you today?
Yeah, I'm good. I'm back in the forest. I have a big fire going on here.
Yeah, that looks actually kind of dangerous.
Yeah, I don't have control anymore, but it's hot at least.
It looks like it's roaring back there.
Well, yeah, I'm comfy.
Nice. I got Mundy pulled up here.
Yeah.
Looks like they're doing
or you
pretty
mean
well.
made?
What?
Do you mean made?
Made, yeah. We're gonna buy this company, guys, because we can finally afford one, and we're gonna change the ticker because obviously they need AI in the name. It's all about AI. So we're gonna replace the O and the N with A and I. Actually, Made's probably already a ticker, so we gotta look that up. But either way.
Made 2 maybe.
Yeah, there you go. We'll just put like dot 2.0. That sounds even better when it comes to AI. And then we're gonna say everything. Every time we do anything, we're gonna say we made that. Yep. And we're gonna bend the robots to our will. Problem solved.
It's about time we need to unite and work together.
Yes.
Yeah.
That fireplace you see behind him, that was made. We made that.
We made it. It's all from Made. So yeah, check out the company. How many years do you think it will take us? Half
for what?
Half a year to grow this into 100 million.
I give it a week.
A week, okay.
Yeah, I'm optimistic. We're gonna get venture capitalists behind us.
Yeah.
We're gonna rebrand the company. That's all it needs is a quick little wash.
You just change the ticker. It's such a rookie mistake, right?
Yeah. These guys don't know how to run it at all.
No.
We also need to just list ourselves outside of the States or something. Cyprus, Bahamas.
Yeah, I think. Yeah, sounds good. Bahamas. Yeah.
Yeah. That way everything checks out.
Yeah.
But how was your week?
It's been good actually. Did you see SSRM was up a little bit yesterday?
I didn't see it yesterday. I saw a different day. I actually thought.
Yeah, but it has been on a little bit of uptrend in the last days. I think it went 4% yesterday.
Nice. Yeah,
but it struggled a bit.
Looks like it's starting to get some volume here.
Yeah. You see that 670 mark
Yeah.
Struggle a bit to get above it and stay there, but it's slowly moving upwards. If you put on the trend lines here, you will see the channel is like slowly upwards, and you know, there are still no new news as far as I know about the development in Turkey, so that's still what we're waiting for there. So
Gotcha. I mean, it still has like a few million in volume, so that's pretty impressive, actually.
yeah.
Yeah, I mean, this is no matter what. They just gotta. You're gonna have to wait till like, I don't know, news or quarterly reports, because this is all gonna be as they get these mines back online and kind of how they're producing all that kind of stuff.
Yeah, and that was the thesis, you know, and the risk in terms of how much it will cost and stuff. It's they have been clear about it, so that's out of the, you know, that's out there as public information, and I'm just gonna wait. And of course, if that doesn't work out, I assume that the price will drop towards where it was there in February again. And I'm gonna sell out probably.
Yeah, yeah. Well, we'll see. We'll see if it can recover. If you guys
Yeah.
hadn't been following, SSRM had a bad mining accident, and that's really what kind of tanked the stock price. And then that's kind of when we became more interested in the ticker.
Yeah. I have a 40% gain right now on it, so I'm pretty happy already, you know.
Yeah, I mean 40. It's not bad.
Yeah. No. So
Yeah, I mean you got to buy. This was a tough one because people lost their lives and stuff, so it wasn't like it was. It was like it was a terrible thing that happened. It wasn't like, you know, it was just a business thing. It was,
yeah.
but you know, with something like that, people, you know, there is fear and stuff with that kind of thing, and obviously it directly affects the business. There was a lot that goes into it. Now, don't get me wrong, all this kind of stuff is inherently a dangerous business. I mean, you're mining deep underground, you know, all that stuff is dangerous, so things happen. But I mean, uh, no matter what, that part's tough. So,
Yeah.
where else are we here? On the dashboard, I saw some stuff look like it's kind of bouncing around. It looks like energy had a little bit down. Um, cattle's doing well. Buy some
Yeah,
cattle.
nice. That's nice.
Load up on beef.
I need to put some in the forest here where I am.
Smart.
Yeah.
You could probably cook them in that oven behind you. And then what's Bitcoin doing here?
Bitcoin touched 100, didn't it?
Whoa, it touched almost 105.
Yeah.
What was that? Why is this on the old stock charts? Hang on, I want to see how do I update this? Oh, you know what? I bet it's because I gotta update all those links. That's a
All those
pain.
links, yeah. I have the same
It's all
problem
the
in my
links.
dashboard.
All right. Well, either way, let's just do it over here. I do
Yeah.
like the newer version of stock charts. They allow you to still look at it the old way, but once I got used to the new way, it's much better.
Okay.
The only thing that you need to do stock charts is when I'm looking at a list. I just wanted to point this out because it kind of irks me a little bit. Not a huge deal, but it's just annoying. So when I'm doing a chart list review here, guys, and I like a chart, I should be able to save this to another. I should be able to save this to another watch list. So if you guys could do that for me, that'd be great. Like right here, it's great that I can see this, but I can't save just this chart. Like if I want this ticker, I have to manually type this into another watch list. Can you make there a button where it says save to or something?
Yeah.
If you're watching, which I'm sure someone from Stock Charts is watching, because we've pretty much touted you guys this entire time. So, with that being said, let's just do what's the regular Bitcoin one? What's Bitcoin under? Oh my God!
You
I'm
need to
clicking.
put in, isn't it BTC USD?
Oh yeah, it's the comparison. Trying to think. Wait, was it slash USD? Is that how they do it on here?
No, I don't think you need a slash.
Let me just go back to mine. I'll just click it here because I'm. Oh, it's just dollar sign. Okay, dollar sign. That's what it is.
Oh yeah.
Now I'll do it. 104.
104, yeah.
Interesting. Wow. But even on that day it went from 91 to 104. That was the high and the low. That's a
Yeah.
huge swing in one day.
It's but if you that chart, like it looks in terms of what we are learning about now, you know, you see that long period there where it's just moving sideways.
Yeah, no, I mean, it's kind of looking in hindsight now, like this is obviously I mean, you could probably argue that is the range it had been trading in for a long time. So this
Yeah.
breakout here, somewhere on one of these days, would have definitely been an interesting time to look into it. I don't have a Bitcoin wallet. I think I can probably purchase it through Fidelity because that's who I use.
Okay.
Now I think most of those people now are accepting Bitcoin, and I'm sure whatever I could open a wallet. It doesn't really matter, but in context of this portfolio, if I was going to throw it in there, I'd want it to just be with my Fidelity stuff because it would just be a pain in the ass to have two different things.
Yeah.
Or just go crazy, hop into a 2x leverage share one, like an ETF, then really get some returns. But I mean, even up here, it looks like it's holding. It's riding the moving averages right now, which all looks pretty good. Still remains bullish. I will say this volume on this day that's a lot of volume in the negative side. So that part makes me slightly nervous because like you could see on some of these days that usually when you see this huge red day in volume, it's pretty close to a peak or it's in a drop, one of the two. Although I say that, and on this day it had like the same volume, and then the next one it pushed up through it. So we'll see. But it didn't have it on this. I mean, you can see it really. It looks like actually yesterday's volume. This is maybe an interesting time because either this is going to jump from here based on this low volume, or it's going to crash. One of the two. So actually, this is an interesting candidate for a breakout.
Yeah.
I actually. I don't know. I'm back and forth on how much I like when it tends to do this like rising. I don't know what they call it, a rising triangle or some shit. I don't really care about the names, but either way. So Bitcoin's hot. Marijuana's hot. What's going on there?
All the right things.
Oh my gosh, all these different things. Let me just look up like one of these companies. Of course, CGC didn't even jump. How is that telling me it jumped and then saying it doesn't exist?
Which ticker do you have in your dashboard?
That was HLMSD or something. Yeah, this must have been an ETF from back in the day, but
I've said this before, but I need to update the dashboard like properly, and I struggle with the same stuff. I have my old charts in the links. So that will just take...
companies. Yeah, so I was gonna say this isn't gonna show anything. Either it doesn't matter. Don't take me on any of that because this who knows what this is even referring to. I don't know how it gets 18% if the ticker doesn't exist.
Yeah, no.
And then what was down here? Oh, AMC. What did GameStop do? I know Roaring Kitty's back with a picture of a
forgot
deer.
to mention.
Who knows what the hell that means?
I have stopped to try to interpret, but he had like 420 was there, you know. He has always some references.
Yeah, one I saw the other one's 109.
Yeah, 109. So people immediately thought it was like a date.
Like January 9th. Wait, when did GameStop do well initially? Way back when?
Yeah, it was in January, but I think it was around 20 something.
Oh my God, we gotta go back 5 years now for this? Holy shit. We're getting old, man.
Yeah, that time has gone fast.
Well, this is that week of January. So if you do look here, the end of this week would have been January 9th, and that's the day when it took off.
Yeah. Okay.
So he could be saying, you know, from January 9th, we went right to 420.
But if I think um, I'm just gonna.
Not that it matters. This is all nonsense, by the way. Everything we talked about right now, nothing to do with anything. You're welcome. Hope you're enjoying the stream.
Yeah, subscribe to the channel.
Yeah, welcome to Solid Investing. Even though I more started trading, so I guess I have to admit my style has definitely turned into trading for this. Don't get me wrong. I say this all the time, guys. I have other accounts, and one of them has always been a long-term investing account, and I imagine someday, if this works out, that I will keep adding money to that account, and everything will slowly shift over to that. This is a very small chunk of my funds that go into this portfolio to do this, but which I think is kind of smart. You know, if you're gonna play high risk, like don't throw all your eggs in this. But
Yeah.
the idea is the kind of returns we're looking for on this one. This one will actually become my largest account if it works for the percentages I'm trying to hit.
I have to say I couldn't stream on Thursday, and the reason we bring this up a lot, like, and I'm sure we're not alone with this, but we don't have so much time right now. It's very busy. So I had to simply use the time I had on Thursday to just update some things. I did that a while back also, but it's because you know, it's in a transition phase where we, or at least I, am moving over into looking more into the swing trading style, and it just takes a lot of reading, a lot of setting up. So on Thursday I worked on finding good ways to screen and scan for stocks within TradingView. And I'm going to test and tweak that moving forward a lot. And I also set up like some indicators and scripts in TradingView. So all that takes time. So that's why I didn't stream on Thursday. But I have to say, like, you know, let's see if it works or not for me as well. But I'm very excited when I read on this stuff, and when I go through the charts. I've looked at a lot of charts now, and I'm also trying to look for patterns myself, and you know, catch the patterns that Kulamagi are talking about, and all that stuff. Just figure out what to look for, and see the setup. And I have to say, it's very exciting. I know you have mentioned that too, Dane, that it's like it makes sense, and I get a little bit of the same feeling as when I started with the Roaring Kitty streams. You know, it's like I believe that this can work if you do it right.
Yeah. With that being said, I will say it is very difficult. And it's not difficult in the idea that like what we're doing is complicated. It's actually not. It's the execution of it is very difficult, and then just fine tuning things. So I guess in saying that, just to give you guys the update for my portfolio for the week. So you can see I'm actually down this week about 1.5%, which so obviously people are probably like, oh, what an idiot, you know, like that doesn't prove anything. Like obviously it's probably not working. Well, I'm actually excited to be down 1.4% because at the start of the week, I decided to play around with some of my things that I've been messing with, and adjust some of my variables in terms of when I sell and buying and stuff like that. And within the first 2 days of the week, I dropped to, by Wednesday, I was down 6% for the week. So I quickly realized that was what I had adjusted was a very bad idea. I was letting some things go. I was allowing my stop losses to I was pushing them back to the end of the day on some of the things that I wasn't doing before, and that did not work out. Now, granted, that day just happened to be a horrible day. Like 2 of the tickers I'm in dropped massively, so I should not. And in hindsight too, it helps you learn. It's really important to like I think it's important to try things, because you can say it in your head and you can like work it out mathematically and it sounds good and sound on like in like the way that you're viewing it, but then in practice you try it and you're like, well, no, everything, this is not working. So stopped doing that, and between Wednesday and Friday I clawed my way back up to the minus 1.4. So like I said, it sounds like you're like, oh, minus 1.4, that's not great, but to be honest, if I hadn't messed around at the start of the week, and if I had just been doing what I was doing, I probably would have ended up. And I got stopped out of a few tickers that were huge gainers. Oh my God, it sucks, but it is what it is. There's nothing you can do. And I should have got back in on both of them, to be honest, but I didn't have time to like watch it like I wish I could. So I didn't get back in. Now you can tell yesterday there were some big winners in here. Aurora, DocuSign, this Rigetti. Those ones all popped up and those ones all looked good. So I took positions in those and those all worked out really well. I think SoundHound on Thursday had a huge win for me too. So it only takes a few tickers to bounce right back essentially. And in terms of like I was saying, I told Johnny this. I feel like this style slowly becomes like you're like I describe it as like clawing my way up, because basically my idea now is as I get my gains to really lock in things, to take profits, to slowly adjust those stop losses upwards. I find that's so far that works for me. If I keep the stop losses loose, sure, you don't get stopped out as often, but to be honest, the whole point of a momentum type trading strategy is that these tickers that are successful should be the ones that bring you up, and any of the ones that aren't, you should be like pulling them out immediately. So my idea here is if anything doesn't work, it doesn't take long and it's out of the portfolio. And then the ones that do work, I let them stay in for most of the move. And then my idea now, this is one thing I'm playing around with still. And like I said, you get to these points where you're like, okay, I think I have this part of my strategy down pretty well. And you kind of let that part run. And then you look at the other spots where you think you're weak or strong and keep kind of like working on those. And I think right now, if I was to continue doing this, this will be successful. Like I said, I mean, if I hadn't played around at the start of the week, I would have been up a few percent right now again, which means this would have been a few weeks in a row now that I've been profitable. And I mean, overall, I'm up almost 20% still, so it's not like it's bad. I know the S&P is up 30%. Said this last week. I get it. But I also, this is in a lot less time period than the whole year. This is in like maybe a month and a half now. So you have to take that into consideration too.
Yeah.
And we are in a good market. I mean, yesterday I was pulling this up yesterday, and my whole goal when I'm trying to do some of my screeners is to keep like the amount of things low. Like I'm not trying to look through too many charts. But I'll say even yesterday on the close, these are the tickers that I pulled in from the close that I liked. And how many were on here? Hold on, let me go ahead a list here. 68 tickers came in. So obviously this is like a really good day because these are all stuff that's moving. It's kind of rare that you see 68 tickers that were doing really well. So you can see like a bunch of these were up. Now of these, the two that I was super interested in was U.S. Antimony Corp, which I got in at like it was like 11% or 12%, and I got stopped out. And then I look back and it was up like 20 something, and then 30 something, and then 40 something. I'm like, it's like that sucks so bad. But it is what it is. So this is one thing that I like to do. So for instance, okay, so now granted, I know I was getting in late on the move. I understand that. So you do have to take that into consideration. And one of the things in the back of my mind I've been working on is, for instance, now ideally, obviously you'd want to get in on this day, the December the 3rd here. This is when it finally broke out of that range here. And this is something I like to point out that I've found really helpful is, number one, it really does help when you have these big sideways moves like this. Now, I used to be really particular. I used to be like thinking like, oh, you got to measure like these really specific lines, this bobble, whatever kind of bullshit you can think of. But really, what I really care about is this, to me, is kind of like the range it's in. Okay, somewhere in here for a long time it's been trading in this range. So when I see it start to break out of that range here, that to me is like a big signal to me. It doesn't. I don't care about all these ups and downs. I don't care even though it broke down on this day. I don't care about that. Now, if it continues down, sure, that means probably the momentum's over. But once again, it could have popped up right here and went right back through the roof, and then I'd be interested again. So it's not like I rule it out. It just means like, it's showing a little bit of weakness here. But this weakness also was on still small volume. So it's not like a ton of people. Like if there's a huge red candle here, that means to me someone or a bunch of people massively sold out of this, which probably means the momentum's dead at that point. But all you see here is on this day, you see massive volume, and that massive volume on top of the fact that it broke out of that range, that should tell you that something has fundamentally changed. They did get awarded a contract, which is why this actually took off. Now, this wouldn't even have actually popped up on my screener, which I don't screen for things under $1 anymore. So it kind of, and this is another point that I have to bring up too. In terms of the way I screen now, I screen in a more specific, narrow range of things. And there's outliers that if I was really trying to catch everything, there's outliers like this, for instance. I wish I would have caught this under $1. But to be honest, even if I caught it above $1 on any of these days, who cares? It doesn't matter. It's still a great, it would still be an excellent return in a very short period of time. Even if I caught it on the second day, and this is in my range, this is where I would have seen it, and it's still on heavy volume, I would be up 100% in 3 days. So it's not like this one doesn't fit into my pattern. But instead of opening up my screening now and say like, well, you know what, this one was under $1 and I didn't catch it because of my screener. If I open it up to under $1 for everything now, just because of this one stock, it pulls in all kinds of BS and all kinds of ones that aren't going to work out. So one thing I've learned is to kind of keep my screening still tight. And then, when it falls into my screen, that's where I get interested in it. But if it's still outside of it, you just have to like accept that you're not going to catch all of those. And you don't want to open up your screening too much, because if you do, you let in just too much nonsense. You want to keep it tight on whatever you see works for you. Keep it to the ones that are highest percentage. Because for instance, let's say stuff over $1 on average, if it shows all the signals I like, let's say it works 50% of the time. Well, if I open it up to stuff that's below $1, maybe now on those ones it works only like 25% of the time. So that means I'm adding in a bunch of extra risk for no reason, just because there's like 1 or 2 tickers I had missed the opening move. Like that doesn't make any sense if you look at it in the long run. So a great tip that I think is super helpful is when you're working on your screening, get it into a range that works really consistently and stick to that range. Don't really go out to the outliers, because yes, there will be outliers that take off and they look great, and you're like, how did I miss this one? Well, you're like, oh, it didn't make my screener. That's okay. Don't bend it to do that, because what you're going to do is you're going to introduce too many tickers in, stuff that looks good but constantly fails, and for the one that works, you're going to have a bunch that don't, and then you're just statistically like hurting yourself, if that makes sense.
I think you can say the same with the price action also, when you do it in this way. Like I think the quicker you accept that you're going to miss out on stuff, like this one is a good example that you got stopped out of, right?
Yeah.
It's better to get stopped out of this one, and then it hurts that it goes up, but then you get stopped out of 10 others that protected you. Right. So it's just to accept that you're gonna miss on some things, and on if you miss out on something in your scans, it's okay. You just have to focus on, like you say, the highest percentage and move on, and just slowly take those gains as you get them. But I have a question for you, Dane. How often do you screen now in a week? Do you do it every day, or?
If I can. I mean, that's it's like you said, everything's time related. Some days, I might only get a little bit of time to actually screen, and to be honest, at this point, let's say I had never heard of this ticker, never had heard of it, I never had screened for it, and I open up a screener on the day of, and I just screen for what's moving, and this pops up. Well, okay, here's one I haven't seen. It has really good volume. It's at 52-week high, which is already bullish, because that means there's no resistance, in the near term above it. So that immediately means like, okay, let's look at that one. And then I look, and if the price was starting, and I see, okay, that yesterday it broke out of a range. on really good volume. And today, once again, it has strong volume. Now this day it pulled back, so this is a good day that you'll get stopped out on, which it happens. It's not the end of the world. But if you had gotten in on this day, if I just had pulled up this chart real quick and I look at this chart, I mean, it takes me 2 seconds to look at this chart now and be like, okay, look it, we were in a range here, right? And broke out of that range, did really well. Now we were in a sideways movement here doing the same thing. I mean, this is literally a textbook Qualamaji step up ladder type play. And it broke out. And now once again, we're following through on strong volume. I mean, as soon as you see this, it should take you like 10 seconds to be like, this could be a buy. Now, up to that point, it depends how much extra you want to put into it. Do you want to just buy on that and take the risk, and then you can figure out later what the fundamental thing is, how long is it going to last? Because I found, for instance, on this one, they're awarded a contract. It's a big deal because it's a small company that doesn't have much going for it. So any kind of contract it can get helps. So it takes off, and I'm okay with buying into this one, and then I'll trim it almost as soon as I start to get some gains, I'll trim it to kind of protect my downside, and also I'll be able to move my stop loss up to like break even essentially, or close to it. It might be down 1% or 2%, but then that way if it loses money, it doesn't matter. It's already break even, And then from that point on, let's say I look up the news, I go and check the fundamentals, and I'm like, you know what? Actually, this would generate enough cash that like I could see the price going. I could see the price continuing to push higher from here. And once you see that, then you're like, okay, let's stay in this one. Let's ride it a few more days. You hear Qualamaji say like you hold something for 3 to 5 days, and in my mind I'm like, well, how do you what makes you think that? And there's a bunch of things that go into it. But with like a contract like this, I would think a 5-day holding period, a 3-day holding period, somewhere in there. I would rather go for that. I don't think I would only hold for 3 days, because now if this company had already ran up like 4 or 5 times in a row, then I'm probably going to hold for even less. Maybe we say 3 to 5 days, but I think that's kind of like I don't hold myself to that anymore. Like if I bought it and within a day or two I sold out my entire position. If I'm up 50 to 100% in a day or two, I mean, who cares? Who cares? I don't care if it goes up another 300% at that point. I captured a big chunk of the move that made sense to me, that fit into my screening strategy essentially, and that to me is a success. I look at this, even though I got stopped out of this, I look at this as a success. This was a company that popped up to me that I thought looked like a buy. I bought and I got stopped out, but in the hindsight, I had done the right thing. This was one that would have worked. So it's okay if you're not perfect. You can't be, but you're gonna get winners and losers. Like I said on Friday, where's my dash? I bought Aurora, DocuSign, and Rigetti, along with UAMY, and the other one was BBAI. And 2 of them I got stopped off on, and then these other 3 worked out. And if I wouldn't have got stopped off on the other 2, those 2 were bigger gainers, or one of them, UAMY was a bigger gainer than this, and BBAI I think was up almost 20% by the end of the day. So all 5 choices were great stocks. I picked 5 awesome stocks on one day, and that, like I said, I would have pushed me back probably above positive if I would have hit those ones. So to think that I was able to pick 5 huge movers in one day is very, I don't know, confirming essentially to what I'm doing is working. And like I said, so this is another thing too. I think it's important. So we do, I get stopped out on this day, so it's good to reflect on the day what happened. So this is where I like to go back and look at the intraday chart. I like to see how it moved, what kind of signals could I have looked at. So for instance, on another day, let's say I look at this and this pops up. We go to like a 5-minute chart here. I'm not even sure where I bought that. I must have bought like on one of these spikes here. So a little late getting in. So obviously, if it was earlier in the day, I don't know. It could have been I got in here. I can't remember if I bought it right at the opening and I got stopped out a little too quickly. I know Qualamaji says you buy at opening range highs, but as you can see here, even though this is a red candle, it did break the opening range high. So there's a ton of times you're going to get stopped out on that anyways. It doesn't matter. And he says to use low of the day, and low of the day here would have kicked you out anyways too. But an important thing to remember too is that you can re-go into these things. If you get stopped out, it's okay to go back in. So another thing is, this was one of the ones that I probably would have been paying attention to more. Now, I'm pretty sure I bought somewhere on this candle here and I got stopped out probably here, which sucks because, you know, after by, what is this, like 11 o'clock, that's when it really started to continue pushing up. And for the rest of the day, if I would have gotten in on any of this spot here, I would have been fine. So literally, I picked like one of two areas in the morning. I mean, if you're buying way this late in the day, that's tough. It's tough when you get this far into the day because they push up really high midday a lot. You'll see this and then fail. And like I said, the other one I got stopped out of was BBAI. So this is another one that if you didn't get in, and you can see these can be volatile. I mean, you know, like I said, I keep my stop losses pretty tight now, and even in one candle, I can get stopped out because it's just moving so much. But it is what it is. It's okay. It's not the end of the world. You just have to kind of accept that. Maybe something to consider going forward is looking at and paying attention. You know, after seeing this first candle and how volatile that is. You know, maybe that'll be a warning sign later on that, like, you know, this goes all the way from 330 to, I can look up here, 312. You're gonna get stopped out of that a lot, you know, depending on how loose you keep your stop losses. And I don't know, maybe if I continue to be, I'm able to pick the stocks better, I can start to loosen up those stop losses a little bit, because it maybe if I'm able to pick ones that are successful by the end of the day, it won't matter so much. But as of now, my from what I played around with on Monday, it was definitely better to keep them tight. I would have done much better off if I had just kept the stop losses tight.
Yeah.
And like I said, this ended the day up 18%, and I think, I mean, don't get me wrong, guys. It's not like I'm getting in here at zero. I'm getting in probably at like I don't know 7% or something. It was up somewhere around there. You know, my bottom screen now is set at 4%, so if something's not at least moved 4%, I won't see it that day. And unless it's on a watch list that I'm watching already, and even if it is on a watch list, if it hasn't moved 4%, I mean, it's kind of hard to call it a breakout just because, I mean, look at any kind of long-term chart on these things. Like a 4% move on any given day, I mean, you know, it can come right back down. That doesn't really mean anything here. This one, even though it's a really short little range here, to me, this gap up from here, that was enough to me to kind of signal that this was going to continue to move. And it was on pretty strong volume, even though this was a down day. Yesterday, or Thursday, I should say, was a pretty strong move. It did pull back some, but then you see it gap up in the morning. To me, that's enough confidence that it's probably going to push up from there. Anything else you see on there?
No, I'm just. I saw in your portfolio one was up like 30% almost, right?
Yeah, Rigetti was
Okay.
up.
In terms of adjusting the stop loss in something that bounces up that much quickly, how far, you know, how low do you set the stop loss on something like that is an immediate success?
Well, the stop loss, like I said, I've been sticking to 3%.
Yeah.
So
Okay.
from wherever I buy in, I set my stop loss 3% below that. And then,
Yeah.
And don't get me wrong, you're going to get stopped out. It's going to happen. 3% is not that much. Some of these times, and don't get me wrong, there's times where I set it at 3% and it immediately drops down to like 2.9%. I'm like, oh my God, I might as well just sell it. And then I check it for a second again, and it's moved right back up because it's moving like crazy. And then I got my finger on the trigger to sell it essentially, just in case. I'll put a market order in and just get rid of it immediately. And and all of a sudden then it goes up and it's like up 3-4% from there, because like I said, these are moving. And then I quickly set my stop loss at 3%. And then who knows, maybe like halfway through the day, I check this, like, you know, I usually like on my lunch or something like this, I'll pull it up and see how it's doing. And, you know, if this is up like 15-20% by the time I check it on lunch, I'm trimming right there, and then I'm moving my stop loss up to what I bought at. So now it's only profitable. And that's on the first day. And yeah, I'm not calling it a day trade because I'm only selling a chunk of my position. I'm not selling the whole position. But to me, I'm happy to sell right there, lock in the gains, And then from there on, this is a free trade. It doesn't matter what happens from here. I mean, yeah, it sucks if it pulls right back, but at least it's guaranteed, you know?
Yeah.
And, you know, I told you, I mean, if you think about it, if my stop loss is set at 3%, if this is up 10%, you sell, let's say, 30% of your position, that's the same equivalent as being down 3%. So it immediately covers one of those. You know what I mean? Or three of them, right? It would cover.
Yeah.
Well, if you sell the whole position, it would cover three. But either way, it doesn't matter. My point being is that that's one way of successfully doing this without having to worry.
Yeah.
So like I said, and that's why I describe it kind of as clawing my way up, because you know I'm buying these things, I'm setting it very tight. If it doesn't work, I get stopped out very quickly, or I sell it immediately. You know, one of those things. It happens. It's not the end of the world. And you know, if you take small enough position sizes, if it's a 3% stop loss, you're losing barely anything. I mean, it's such a small amount of your account. Who cares? Like you know, you're losing, you know, like I said, like parts of a percent every time you get stopped out. So you can do this, you know, a couple times, and it's not the end of the world. And you know, we're in one of these periods that stuff is moving. So you know, it's not that you know all the swing traders say it, that you have to pay attention to the overall markets. If the overall markets are pushing up, you have to be trading in those times. If you're not, it's only a matter of time before the markets either run sideways, which you can still trade in a sideways market, but as soon as they start to correct, trading, especially like a momentum strategy, it's going to fail. So during those times, you're either going to have to stop trading, or you know, let's say on an average day right now, I make, you know, 2 or 3 trades. I'd say that's pretty average for me. Yesterday was like I said, everything was moving, so I made 5 trades yesterday. So you know, that's rare. I usually am not making 5 trades. I'd say 2 to 3 is definitely my average. But if everything's pulling back, I'm probably only going to make 1 trade at most, because I'm just looking, maybe one thing like really looks good. You know, it really hits all my criteria, and you know, and there's like a catalyst on top. Like during a down market, there better be a catalyst, because it's not going to just take off for no reason. The only reason it's going to change around is even though the market's going down, something really good's happening with whatever business you're looking at. So that's how I'm starting to think about it. If when the markets turn, how I'm going to play it, I'm going to really pull back. But I think that, I mean, those were some of the bigger lessons. You know, like I said, the screening thing for me is big, because you know, I had loosened up my screening to be able to find things a little bit more, and then in hindsight, I'm like, all I'm doing is adding statistically more chances to fail, which makes no sense. Stick to what works most often, and you'll narrow down your list, obviously, but that's kind of the goal. Like, find things that will be successful. You're going to miss ones that are outside of your screening range, but who cares? I mean, you know, you have to just focus on the few that work out. And like I said, I mean, look at Friday. I mean, this is stupid to me that here's the close here. I mean, these are all, I mean, don't get me wrong, probably, well, these are all 8% movers. I mean, even some of these ones that are 8% movers, I mean, if you can catch these when they're up 4 or 5%, it's still like a 3% on the day, which I know doesn't sound like much, but this could be the start of a breakout on most of these. So a bunch of these. And then, for instance, like what I'll do, so it's the end of the day, so then I'm going to start going through, start looking at things. You know, I look at AAOI. You know, it's been slowly moving up and it's starting to show some weakness here. And you know, I see Bollinger Bands push below 20 on the two standard deviation here. It did bounce back, so you know, this is probably going to move sideways for a while. So like this, to me, this is a bullish chart, but it doesn't mean anything in terms of the strategy. So and relatively choppy. But you know, like even here, like if I saw it really consolidate tightly like this section, this is more interesting, and that's where you see the breakout. But where it's kind of doing this and up and down, like it's too, you can't, I don't see anything. For two, I don't see how you see a focus on this. Like it's too choppy up here now. Like to me, and we could be at the top of a full move. Now, don't get me wrong. If you look down here, sure, it worked its way up slowly. But look at all these times. You know, this looks kind of like it's breaking. I mean, okay, so it starts to break out here and ends. Then it kind of consolidates here, breaks out, and then breaks right back down. breaks out and then breaks right back down. You know, so there's a bunch of chances here you're going to get kind of like screwed out of these. Now, like I said, a big move, and sure, it becomes interesting. So right here, we had this really choppy up and down. You would have got stopped on a bunch of these ones probably. And then we're in this down period. Now finally has a massive breakout here on huge heavy volume. This would be a day that, okay, something can happen here, and if you can get in on this day, you can catch this first day here, which is pretty much most of the move. But you know, within 5 days, if you had sold just in this period here somewhere, and if you had held to a 10-day moving average, I mean, look where you're at now. You didn't get stopped out until 34 up here. You know, and that's buying it somewhere. Let's say you got in around like 21, 22 bucks. You know, it's still a 30% gain in a few weeks, 2 weeks, 3 weeks. I find that 10-day moving average for me is a little long. I'm kind of stepping away from that. Don't get me wrong, in a super bullish market, which if you look at most of the Qualamaji streams, it's during COVID when, like, you know, the GME craze was going on. So during those times, sure, I bet it was worth holding everything till a 10-day moving average, because everything was, there was so many 5-baggers in that period. Like, I remember watching the year after the RK streams had ended and thinking the guy was an absolute genius. And then I'm like, no, he's just a value investor who saw bottom and bought everything at the bottom, and then everything became 5-baggers, you know, from that bottom. So that's just a market correction. And even the swing traders will say that's the market you're looking for. That's a dream market as a swing trader. You're gonna kill it during that time period. But they come around so rarely. It's not like, it's super rare that the market has like a 50% correction and then all of a sudden you can hop in at the bottom and ride it back up. So, they're kind of biased. Those streams, you have to think that's a very biased period of time. So don't listen to what someone was saying during that time and think you can just apply that generally to any time in the market. That's a really bad thought. But either way, so like I said, on this one, breaks out here, and then it consolidates for a while and holds sideways, and then once again, it breaks out on this day. This would be another time you could get in. And then as it gets into here, like I said, it does break out on this day here again. So technically, you could call this candle here a bit of a breakout. And if you had sold within a few days of this, I mean, sure, you might have gotten, let's say you sold most of your positions through here, and then you rode this one down. If you had a stop loss somewhere in here at like break even, I mean, this still would have been, this one would have been a good return, and that's in the course of a few days. So, yeah. You just have to, in your head, think like, as you start doing this kind of thing, how can I pre-plan some of these moves? When the moves occur, how can I execute and make sure I get into them? And then on the ones that I do, as things move up, how can I make sure that I'm protecting my capital as well as adjusting that stop loss to make sure that it gets locked in? If you slowly do that, you will claw your way up. And that's like I said, that's kind of what I'm seeing here. It's definitely a little bit more active, but it is what it is. And you just have to be intelligent about the math. It doesn't take a genius to figure it out, but if you're up so much percent and you start to trim there, and then you start to slowly adjust your stop loss, and like I said, you can do this in longer terms. So for instance, on this day, like it's tough because on the charts that work out, it looks and sounds really good, but you have to remember there's hundreds of charts out there for whatever you see that failed. So as you loosen your stop loss, you're like, see, if I had just loosened my stop loss on this day, I would have been fine. Yeah, on this chart it would have worked, but then think about all the other ones it wouldn't have, and for every one of those, as you loosen that stop loss, you get hit harder. So it's just, you have to think that way. And if whatever you're going to do on the downside, you have to look for it on the opposite return on the upside. So for instance, if I drop my stop loss down from, like I said, I usually use about 3% right now, which I know most people probably think's nuts. They're like, how do you even do that? And I'm like, well, it just is what it is. You get stopped out. But if let's say I pushed it to 8% or 5%, who cares? Well, now, where before I said I can start getting out, I can start trimming at 10% and really start to see gains get locked in. Now I got to wait till 15 or 20%. And how many less stocks actually make that big of a move? A lot less. Like just going to this list here. We had, let's say on average you're not super perfect at executing. Let's say you get in around 8 to 10% on most big movers. Now, most big movers, if you had gotten in around 8-10%, you've gotten barely any of a gain. You know, some of these you've gotten a couple percent, even in here, maybe 5%. And then the ones that finally actually got above 20%, there's only about, 15 of them, 10 of them. So my point being is that, when you're executing on these breakouts, if you have to get 15 to 20% returns, let's say you get in on 10 of all those, that means it's got to be at least 20 or above, which means now this is the range of category. This many stocks are the only ones that are successful for you. Now, if you're not worried about it and you can hop in on things a little bit earlier before they necessarily break out and you keep your stop losses tight, well, now I can get anything that's maybe in, down somewhere into this range. So it's just slowly increasing the number of ones that you can get into. I hope that makes sense.
Yeah, it does. It's a good point. But I had a question on that chart because I'm like I said, I've been looking at a lot now, and I've been thinking. You can see you've talked about before, and I know in the books I've read, they talk about like some tickers have their own personality and stuff like that.
Yeah.
But in this uptrend from what is it, September, right?
Mm-hmm.
You can see a certain pattern until that big volume day in November, which kind of interrupts it a bit. Does that change anything in the way you interpret the chart? When something new happens, like a clear catalyst that sends the stock price way up compared to what it has done in the past?
Yes, I mean this right here, this screams that something is changing in the market, and this is why people argue that the market's efficient, and I would say this probably proves that it is somewhat efficient because something changes and in one day the stock price goes up this much. And then it takes a few days. People are trying to figure out what this actually means. You can see that's literally what's going on here is people are deciding, there's a bunch of traders doing this, so they're just pulling out gains and seeing what's going on with the volume. There's a bunch of investors and fundamentalists who are looking at the company now because after a big day like this is on everyone's radar. It's on everyone's radar now that something happened with this company and everyone's looking into it. Now, don't get me wrong, it's a 1.75 billion market cap, which sounds crazy, but to big institutional investors, this is small. They're looking at stuff that's, probably at least like, 10 billion or more. So, still, I would say this is still like mid cap now, maybe even small cap, I guess some people would probably argue, which is kind of nuts. But you get my point being is that, something like this changes. This when I look at the chart, let's just pull this in real quick. All right, so if we zoom in, I just want to get that one count. Wow, look at that, perfect. All right, so if we zoom into the chart during this period, and this is what you saw, do you not see how obvious this breakout is from this point perspective?
Yeah.
And if we had just looked the day before, now granted, this candle won't be fully formed, obviously, on the day that you're looking at it, but let's say that the price now is here and you're trying to decide, okay, I'm definitely a little bit late, would I be interested in getting in on this? Well, what's been happening? The stock's been in an uptrend. It finally got to like the $20 mark and it broke down and it's been holding here, and then yesterday there was a nice candle. It kind of recovered some of the gains here. It's been making those higher lows essentially as we're going here. That's what Kwalamaji talks about constantly. And like I said, we're just in this general uptrend here. That's more what I'm concerned with. And I don't know. It doesn't really matter. This one's not much of a box. This is more like one of these type shape things. But who cares? I don't really care about this. It's just the general idea of it. People think of like you have to look at these. They have to be flags or triangles or like don't. It doesn't matter. Just look at the chart and figure out overall what's going on. Overall, this is just in an uptrend. And finally, for some reason on this day, we have that breakthrough. And what day is that? That's like November, I don't know, 8th or something like that. I can't remember if it was earnings that day, or if it was whatever the stupid thing was. If this loads, let's see. November 7th. I guarantee you that's the day. All right, so remember what I was just basically showing you guys. All right, this is November 8th. Okay, November 7th was when they actually released these. GAAP revenue was 65 compared to 62 in the third quarter at 43 million. Gross margins 24% compared with 32. 21 in the second quarter. Non-GAAP gross margin was 25 compared to 32. So actually things were down. Net loss was 17.8 million compared with net loss of 9. Net loss was 8.8 million. For fourth quarter. And don't get me wrong, so those numbers, it looks like things are in a downtrend, but everyone's buying. So this is where actually this really helped me as a fundamental analysis or analyst, because there's so many times where back in the day I would just look at the numbers and I'd be like, you know what, it doesn't make, like, I wouldn't even look at this because I'd be like, the numbers are down, shouldn't be good. Yet the market is telling you something very different. The market bought this, they love this. So this is where you have to dig. This is where you need to figure things out. And this was on the 7th. The 7th was an up day. This was before the move. This news came out on this day, and it was an up day.
Yeah.
So probably I'm assuming in the call we had a solid third quarter. We ramped up production capacity to meet our customers' rollout schedules. We recorded double-digit sequential growth in all our data center, driven by new wins for the 400G products, while our CAT TV business more than tripled.
Guidance on revenue.
What'd you say?
I think it's like much higher guidance on revenue moving forward.
Yes, our revenue and gross margin for the quarter were in line with our expectations, but our non-GAAP loss share was larger than we expected, which primarily due to accelerated R&D spending due to greater than anticipated new customer requests. So the earnings were down, but it's because they accelerated their R&D to help with customer requests, especially in our data center business, where we saw notable interest in our 1.6 terabyte transceivers. We're carefully managing our balance sheet as we execute on our plans, which anticipate a sustained period of growth in both our data center and CAT TV business. So regardless of the numbers, I used to think the numbers mattered a lot, but what really matters is those are the numbers right now, but who cares? What's going on is this is why I always think Warren says it's more important about what's going on with the business. This statement right there, that's why everyone bought. So, like, this is another thing that's important. What matters to the market? This is what matters to the market, not any of this. I mean, don't get me wrong. It says it's growing, even though it was down, from the previous year. That's not necessarily the issue. Their point was that they spent a ton on R&D and that things are looking optimistic. And like I said, let's say that you were screening and you were looking at earnings. Because, we talk about episodic pivots, and this is technically an episodic pivot as well, not just a breakout. It was at 17, opens the next day around 1950. And once again, 1950 is actually above the most recent resistance, essentially. It pulls back a little bit, so you could have got stop lost if you came in. But I guarantee you, if I zoom in, I'm not going to do it because it's a pain in the ass to do it down here. I have to, just really fine tune it to get just the date. Actually, you know what? Screw that. Let's do it. So this is November 7th. We'll do November 7th and November 8th. Oh shit! I need to do a date. Hang on, daily.
Then just a quick question on the 4% thing. In your screen, is that on the same day as you buy, or is it like the previous day?
It would be on the day of a breakout.
Yeah.
Yeah, I mean, if it had broken out on 4% the day before and I hadn't noticed it, and then today I come in and it's still pushing upwards, that's definitely bullish. And in terms of, like, if you're going to trim, we say you hold it for 3 to 5 days. if it was up yesterday and today's the day that you finally noticed it and you're getting in, well then just push everything up. Now sell it in 2 to 4 days. You know what I mean? Like it's okay if you didn't get in on the first day. Don't get me wrong, it's best to. You get the biggest return if you look historically. Look at any of these moves. If you had gotten in on the first day, big difference, huge difference. So for instance, you would have gotten in on this day. Now don't get me wrong, this first candle is super tough. This is a 5-minute candle on this day, so it goes everywhere from, it opens at 1950, gets down to 1863, closes at 2023, and then it averages out on one of these. So using Qualamagi's strat, you would get in on this candle, and from there you would have been set. You would have gone in at 21, ended the day at 27, and then from there, like I said, go back to the daily chart, and you would have like I said, you got in at 21. You could have trimmed, set your break even, and then you could have held this, and you would still be holding until literally yesterday or on Thursday, where you would have sold at 36 the rest of your position. This is a textbook play in a lot of different ways. Like this chart to me, this section right here, this one to me seems pretty obvious. Now, if it doesn't seem obvious to you, you just need to keep buying and trading these things. This is why these guys talk about this. And then this should become clear to you. After you've done hundreds of these trades, this will start to scream to you this was a buy on this day. Now, granted, we were just talking about ones if you didn't get on the first day. I mean, look what happens if you didn't get on the first day. You most likely get stopped out. It doesn't go anywhere. So it is really important to catch some of these on the first day of the breakout. Now, not always. There's probably a ridiculous amount of examples where it doesn't matter. But just know if you didn't get in on that first day on this particular one, now later in the day, you would have, on that next week, you could have got into it. So this maybe joined, it started trading sideways. This would have got added to my watch list pretty quickly. And then I'm watching it, you know what I mean? Waiting for that next step up where it next breaks out from.
Yeah.
Sorry, my internet is going slow here. Oh, come on.
So what's the criteria for what is the criteria for kicking tickers out of your watch list? Just like a breakdown of the pattern?
What's up?
Do you have a criteria for kicking tickers out of your watch list? Is that just like a clear breakout of the pattern?
Yeah, I just kind of screen through, and if it looks like it's not going to break out, I'll get rid of it.
Yeah. And do you get rid of anything in your watch list if you sell out of a position, but it's successfully?
No.
Or do you keep it there for to check if it can consolidate maybe and get even higher?
Yeah, hold in, because for instance, okay, so I'm just pulling this back up again, but AAOI, this one moves sideways, right? Imagine if I had trimmed in here and let's say I used the Bollinger Band to get out. That's like a 5-day moving average on this line here. Let's say I sold out on this day. If I had all of a sudden been like, okay, I played this one good, I'm good, and I took it off my watch list, 2 days later it breaks out again.
Yeah.
Now, if you had just held it all the way through, but there's all these like things you can look in hindsight and be like, well, if I just held this all the way through, I would have made even more money. But you have to think it's easier said than done. You're not going to hold all these, and there's a ton of examples where if you would have held it, you would have lost a ton of money. So you have to kind of like average and hedge your bets as you're doing these kind of things. And this one, let's say, like I said, let's say I had sold out here, keep it on my watch list, because once again, it breaks out, and I have another opportunity to ride this up even more. Yeah. Technically, it consolidates here. Could have broke out here again, and you could have rode this part up and sold out again. There's a bunch of different examples on this one. This is a good example of a chart. This one, this would have popped up on like a daily screener for me on one that's moving, but I would not have bought this. I don't care if it's breaking out, it's in a downtrend, it's below the 200-day moving average. This is the first day it had a ton of volume. Let's look at what happened last time. Ton of volume on this day. It moved up a little bit and then broke right back down. It's really choppy. Back here, maybe this part of the chart's a little bit more interesting on here. And we could be in a really big consolidation phase. If you look at this one, consolidation on this one might be somewhere in this range, you know, something like, you know what I mean? I don't know, or wherever you draw your dumb lines, who cares? But my point being is, like let's say on the next day it breaks up like through this area. Well, now it becomes interesting to me because now we've really broken out of a range. I mean, you can argue there's ranges here, there's definitely a range there. So like these are points to watch. Like you hear Qualamaji and Pradeep, they talk about like looking at areas of resistance and support. You know, every time it breaks through one of these, what does it do? When it breaks through one of these, does it really push right past? Because if it really pushes right past, that means probably most likely everybody in this area had sold out. Because they're not getting to break even and then selling everything to get out. If that you know what I mean?
Yeah.
Now let's say it gets to here and all of a sudden it's really struggling to break out right here. That should be a big red flag because it's saying like, hey, all these guys are trying to get out of their positions. So there's going to have to be a ridiculous amount of interest in this portion to push this back up, to push through.
Yeah. So that one, even with a higher volume and the bounce up, would not even make your watch list because it's so far away, or?
Yeah, I mean, to me, there's I don't see anything here. Like I said, it's in a downtrend. Sure, it has a big update, but it can have it doesn't. Nothing's broken out. Nothing here is interesting to me. Sure, I guess it broke out of this, but I mean, we're in a downtrend here. I don't want to break out from a downtrend. That's the breakouts from downtrends are breakdowns usually. Keep that in mind. Most of the time, if you break out in a downtrend, it turns back into a breakdown. So be really hesitant with these. I can pull up tons of examples of this where it fails. Like this one, for instance, in this period, it's kind of choppy here. This isn't really a super interesting one, but once again, breaks out on a really strong volume on this day and breaks out of this range right here. And this is after an uptrend. So, you know, this one here, this one as it breaks out from here, I guess you could kind of argue this. Still not really above a lot of resistance lines for me. So this one's not super exciting even here for me. If you had bought on this, sure, it actually worked, so don't think it can't. But like, just not a super exciting one. This isn't going to be like my first pick if I had a couple during a day. And then, you know, it fails to break out, starts to rise again here, and then breaks out, and it breaks all the way up to this range here. And look at, well, guess what happens the next day? Everybody that bought here is selling on this day. That's why it's a down day. And when you see that it sold off and then people started buying again and it ended the day up, that's actually a bullish candle right here. Because what it's saying is all these guys are getting out of their positions because they want to break even. It doesn't keep selling off, which means that this momentum's intact, and then the next few days it goes up. That's what's happening. That's why you have to recognize this is all just supply and demand. That's why, to me, back in the day, I used to laugh when people would talk about what the candles are and why they're bullish and bearish. It doesn't matter what the hell what it looks like. Know what's going on. Like, that's why this sold off. Now, it's easy in hindsight to say that, but this is something that as you look at tons of these, you'll reflect on it and be like, oh, like this was a pretty obvious sign that on this day sold off pretty heavy, but then people kept buying. There was more buyers because if this was just these guys selling, this would have ended the day and stayed down here because there was no more buyers coming in. What this said is a bunch of those guys sold out, and then the buyers kept buying, and they pushed it right back up. This is bullish. Oh, I bought this one.
Oh yeah, that's in the portfolio.
So you can see, even I surprised myself. Like this one to me, bullish. It's in this uptrend here. Don't get me wrong, it broke down. We had some consolidation here. We're at like no resistance, and all of a sudden it pushes right out of it.
Yeah.
And not the strongest of volume. So don't get me wrong. It's not like this is like a. You know, Qualamaji talks about 3, 4 star, 5 star, that kind of thing. Yeah. This one to me is like maybe 3.5 star, that kind of thing. You know, so not as sure. And look at my portfolio. Or was up the least of the ones I bought.
But does that So the stuff like that, like the setup and your belief in the success of it, doesn't interfere with your stop loss rule. You still
No.
keep that at
Stop loss
3%.
is 3% no matter what. It doesn't matter.
Yeah.
Think about it. If something's moving, right? Let's say on average something was going to move 10%. Let's say on average you got another one that's going to move 30% a day. You don't know this, but you know that that's what's going to happen. If I bought the one because it's up 5%, but I like the setup, and it goes up to 10%, okay, good, that's what it was going to do. Now, if it had broken down, it's still a 3% loss. Now, let's say the other one, it's breaking out and it's already up 15%. I'm going to be more hesitant to buy it because it's already up 15%. But if the setup looks really good to me and everything screams it's still a buy, now I'm talking it has to be like really heavy volume. It has to be breaking out. Doesn't have to, there better be like no resistance, essentially, that kind of thing. And hopefully a really good catalyst. All those things combined, well, okay, if it's up 15% and I buy and my stop loss is still at -3, who cares? If I get stopped out, it's not the end of the world. But that one, like for instance, Rigetti here, that one pushed up to 37%. So massive gain. And if I wouldn't have taken that just because, I'm, thinking to adjust my stop loss, if you use low of the day and stuff like that, which you can, then you have to adjust your position sizing. That gets very complicated. I don't have time to do the math for that. I'm not saying that that's not going to work, but for instance, let's say this was up 15% and I had adjusted my position size down because I was worried about how much it's up and where my low of the day is. Well, this was my biggest mover and I just made it my smallest buy for the day.
Yeah.
In order to keep my stop loss even, by increasing or by decreasing the position size. Well, now the biggest mover was the one that I made my smallest position.
Yeah.
I'd rather take the 3% stop loss on that and know that the potential for it to be a bigger winner is there.
Yeah. No, I agree with that thinking. In terms of your entry,
Bullish.
Like the timing, do you use the ATR number and Kulamagis talks about that, or is it just more like how do you calculate when it's too late to jump in?
It's never too late.
Okay.
Because if your stop loss is 3%, the most you can ever lose is 3%.
Yeah. So,
now, don't get me wrong. When I say it's never too late, you can look at almost every one of these charts on an intraday. Let's do this real quick. Best to get in early. 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 Do you see a trend?
yeah.
So don't get me wrong. Now don't get me wrong. You could have bought later in the day on this one on Bark. You could have gotten it around 12:30, and it would have been still very successful. Yeah. But most of the time, you want to get in early in the day. They all say it. Everyone says it. You want to get in early in the day. If you're not early in the day, you're doing what most people are doing. They're slow to get in. They're not really in a rush, and they think like, you know what, they're looking for other people to convince them to take a position. You need to convince yourself when it's smart to take a position so you're ahead of everyone else. If you don't have all these little things in place to be a step ahead of the next person, you're screwed. Good luck. Best to get in early, 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 best to get in early. I mean, every one of these, literally every one of these. Yeah. So, if
I've actually used something similar. Like I've been in early in the ones I purchased with the fundamental method almost always. A little bit because of the time difference, but also because I've seen that we have always used the charts and the stuff that we have been dealing with normally. When they look good on the charts, also they get quickly that bounce out straight away. So I've always liked to be buying at the open almost,
Right.
Yeah.
And so here's Rigetti, which is one of the this was my big winner for the day, one of the biggest movers of the day, right? Now, for instance, if I had gotten in here, number one, in terms of getting in, the best part is as long as my stop loss doesn't get triggered, which this one's a pretty clean chart. You didn't get knocked out on most of these candles here. You know, once again, best to get in early because it's the biggest return for the day. But if I had bought in on a bunch of periods in here, any of these little pullbacks or something like that, there's a good chance I didn't get stopped out. I got in later in the day, so I didn't get the biggest return. So you have to think, it limits your profit the later you go in for the day. But in terms of if I had set my stop loss at -3, most of the time I won't get stopped out here either. Now, I'm not saying you're not going to, and you have to think too, sometimes you have to jump back in these things. Let's say I bought on this candle right here, right at the top of this at like 350, and I get stop lossed out immediately. Then within the next, is this a 5-minute chart? I think it's a 5-minute, yeah, it is. So in the next 5 minutes, it breaks back through. If you buy on that one, you get back in. Now, I'm already down 3% because I got stopped out once, so it's a wash sale, but who cares? I mean, this immediately goes right past that mark. So if you have the confidence and you believe in the setup and you know what you're looking for in terms of like, you know, what stands out to you as a real momentum stock, or there's a really good catalyst, or this is a company fundamentally that keeps improving and earnings just came out again and they're good, all those things add up. You know, like I said, it's really not all that complicated. It's just being quick, it's making good decisions, and it's knowing that mathematically you have to claw your way up. If you're not doing that, it's not going to work. You're going to slowly get eaten alive by these things. And you'll find your own methods of doing this. Don't get me wrong. This is just what I've been working on, and it's working. But you know, you might do this, and you might notice a few different patterns than me that you're very successful with. So just because you see me saying all this, trust me, it's not easy to do this. You're gonna just because if you saw this and you're like, oh, this all makes sense, I'm gonna go do this on Monday and make money. Good luck. It's not easy because you haven't been practicing it.
Yeah.
Not to say you can't do it. I do think anyone can do it.
Is it Pradeep? His name is in Stockby.
Yeah.
Yeah, he was saying, like, and you know, he has been doing this for more than 20 years, right? In this exact strategy.
Yes.
And he said in one of the more recent videos, it's not recent, but it's like 2 years ago, something. I don't remember the topic, but he said like something like you shouldn't do this unless you have learned or noticed a pattern on your own. So even if he not even, but you know, probably because he's so experienced, he understands that people might see still things that he has not seen and are successful trading that pattern.
Yeah. And you know, like if you look at this chart and then you look at this chart and then you look at this chart and you don't see differences between those on terms of like where you would rank these ones, well, that means you need to go and you need to do a lot more practice, because I can tell you really quickly which ones I would be interested of those three. All of these, you know, like you know, Coherus, huge run up here, but I would have never bought any of this. This never became interesting to me. It looks like a lot of death traps in here to me the whole time. And don't get me wrong, there's probably periods where you could have definitely gotten in on this. This day here, I guess you could have argued that's probably your best day to argue this was a bit of a breakout, and then you would have gotten this huge day, even though it pulled back down all day. Still a huge return in a very short amount of time. So I mean, there is instances, but it's just a downtrend. Like that's another thing. It has to be in context. So Coherus, if you just looked at this chart and you're like, you know what, if I just looked at this chart, if I had just bought on this day when it finally kind of was breaking out of this little consolidation right here, it worked out great. That's great, but just know that there might be another 1,000 charts that look just like this one that fail. So if you don't have the general context of saying, you know, this one worked, but most of the time that one doesn't work, then it doesn't matter. You're not gonna have the intuition to be like, yeah, that's not a great breakout, even though it did break out. You know, like a day like this, you see a mover like this, who cares? What does this mean? What does this mean that it popped up right there? You know, that's probably because it's sold off so hard. CRNC, this looks good.
Yeah, that's more interesting.
This one looks really good. This starting to break
Yeah.
through this range. This looks good. Like CRNC is one that's been on my list. Oh, it always does this with CRNC. It wants you to. Is it CNRC? Is that what I'm doing? No, it's CRNC. Why is Yahoo's thing like? I don't know what's going on with my internet. It's like super slow. And it's continuing to move in after hours, which shows you that there's still momentum in this. And it's a 12% move. So this like that's interesting to me. That looks good. You definitely could have bought this on Friday. This would have been this is one that I would argue has already broken out. You're already going to be getting in on day 2 here, if it continues. I'm not saying it will, but another big reason. I mean, you could have gotten in around 7 something somewhere in here. I would argue that this was starting to look like a buy, just below 8.
In terms of the consolidation phase, do you look for is a consolidation period too short for you, or do you just look for like tight candles and lower volume and stuff like that, and then you get the breakout and then you move?
It's tough to say. That's kind of a feel thing. And it's everything is like you have to react as it happens. Like there's going to be a bunch of instances where something moves sideways for a while and then it breaks down, and like, you know, if it had broken up, then yeah, or it broke out, it would have looked, then you would have argued that that was a good move. But it's in hindsight that you can say that. So you have to just kind of do what the market tells you. If it's starting to break out on that day, then it's up to you to make that decision if you think that's enough to warrant a buy. You know, Fastly's a tough. I mean, and don't get me wrong. This is why you have to pay attention. This is one where it broke out from this kind of range, like these points of resistance up here, and it had moved up, moved sideways. You know, moved up and broken down, but then it recovered right away, and then broke out of this range, and it's been trading upwards. But on here, you probably would have got stopped out. So you know, it broke out, but it's tough to trade this one. Now, like I said, maybe your style is you set looser stop losses, and this one would have worked for you. So it's figuring out what works for you. And you know, I say what my stop loss is today. I adjust all these things constantly. So just because I'm saying I'm doing this right now doesn't mean that if you go out there and you listen to everything I said today and you follow it, it's going to be successful. Because you're always slightly adjusting. The market changes, things change. So it's more just at this moment in time, I've noticed that that's working this week essentially, or you know, whatever. You get my point. Now, don't get me wrong. There's definitely generalities of things, and I'm sure they work out more often than not. It just kind of depends, but that's kind of the way I would look at it. Like I mean, most of these, I don't know if you guys see it, but like most of these charts, it takes me a second to scroll through because I'm like, you know, nothing. This looks okay, but it's already had such a huge run up. This one gets real risky to get into. You know, and then there's like a lot of things like you have to understand some of these businesses. This is Hewlett Packard, right? Big computer company. It's worth $30 billion. It just had earnings. It jumped up. Now this jump up here, it looks good, but do I think it's going to continue up from here at this size of a company and it's already made a couple of these bigger moves? Probably not. Now you're not going to get that from a chart. But to me, I know what's going on with Hewlett Packard. I know what it's been doing. I mean, we were just trading at 15 bucks and now we're at 24. Like I said, it's a $30 billion company. Hewlett Packard ain't coming out with nothing new. That's like game changing. You know what I mean?
Yeah.
So like, even though it broke out here, I have a hard time thinking that it's going to continue up here. Now, if you had, I guess maybe on one of these ones, it's choppy. You know, there's a lot going on here that's tough, but that's what I'm saying. There's a lot of nuance to this. So when I'm scrolling through here, just because something even fits the setup doesn't mean that it's interesting to me either. And I might be wrong on that. And maybe Hewlett goes up to $100 in the next 5 days. And then, you know, I'll have to rethink my judgment call on that. You know, hot here looks pretty good, but it's had 3 days of positive volume and it hasn't moved a ton. So that could just be that it's kind of more buyers slowly pushing this up, but I don't know, it could break out, but it's tough up here. This looks like it's tough to gain steam just yet, but it is moving up. So, it's one of those ones that you're gonna have to make that call. Like a lot of these times, it gets up and then it comes back down. It got up and then pulled back. So there's still a lot of people selling right here, if that makes sense to you.
Yeah. I just want to. Do you have to go soon, right?
Yeah, I do. I do gotta go. Sorry.
Just wanted to shoot in a question. It's a bit we haven't touched on it. I think I know Kulamari, he uses what is it? What is it like? Price volume? What is it calling? Dollar volume.
VWAP, is that what you're talking about?
No, he for his scans he's using like dollar volume.
Yeah. Okay, yeah.
Yeah. In terms of your scans and your setup for that, do you also use like a low limit of just normal volume?
Yeah, I definitely find that at certain volume amounts, you're much more likely to have success. I mean, if you think about it, the lower the dollar volume per day, the more chance that the breakout won't continue. If you think about it, you're trying to ride the coattails essentially of large institutional buyers in this strategy. So if you're looking at something, and let's say this share price is $1, and it's got let's say it's traded 200,000 shares so far in the day, and it looks like it's starting to break out. Well, know that that's $200,000 that have come into it, right? So
yeah,
$200,000 compared to an institutional buyer. Let's say you have $100 million. $200,000 is nothing. So someone could that might have been, say it's an individual retail person who put $100,000 down on it. That's not maybe that's not much to them. Maybe they have $10 million in their account and they put $100K on that. Well, they're half the shares, just one person. Yeah. So they could sell that out, but at the end of the day, they might be a day trader who's got $5-10 million, and at the end of the day, they're planning on selling that. So you buy that one because you're like, oh, it looks like it's breaking out, and it's moved 200,000 shares. Share price is at $1, so it's in my wheelhouse. Now let's say the share price is $1 and it's moved 10 million shares. Well, okay, now we're talking $10 million. Like, it's a lot harder for someone to just sell that off. You know what I mean?
Yeah.
So yes, as volume and volume dollar average goes up, your chance of it being successful should go up. People aren't spending that much money on something to get in and get out. You can't move that much shares without crashing the stock price. So yeah. Even if they are planning on selling out over the next few days, you'll see that it fails to continue to break out because one of the larger guys is selling into that strength of buying.
Yeah. And if you for example one day you decide to screen just in different sectors, that limit of volume doesn't change, it's just static like that, even across all sectors?
Well, I mean, maybe to some degree.
Yeah.
But yeah, I mean, it just depends. And to be honest, the only way you're going to know that is by back testing.
Yeah.
Everything I just told you, I've learned in like literally the last month and a half. So,
yeah.
Don't get me the fundamental side and business related stuff, that's been for years now. But in terms of looking at the chart, understanding the supply and demand of it, all that kind of stuff, that's just been from me buying stuff and seeing how it works, and then looking back at it and see, what did I see happen here? What can I pick apart from that chart?
Yeah.
And that's why I said, like everyone says, investing and trading is a bit of an art. Well, it is, because you kind of have to kind of see it. If you're looking at these things and stuff's not popping out to you like that, then you have a ways to go, essentially.
Yeah. Yeah. No. Cool.
All right. And so normally, what I wanted to show today, and I didn't quite get to it, is I'll go through the charts. I'll mark down all the tickers that I like, and then I'll pull them into the fundamental one, and just give them some screen throughs. just see if there's any recent news on them. I'll go through the fundamentals, see where it's at in its own business cycle. Is it a new company? Is it a tech that's high growth? Is it an older company who's been around for forever, like a Hewlett Packard, for instance? And then you'll start to also recognize that those charts correlate very well to the fundamentals. You can kind of see what's going on in the background as well as compared to the newest news, and that's going to help you with your chart reading. Yeah. I think both go in tandem. I think it's crazy that people don't use both. I really think it helps to use both.
Yeah.
All right, well, I am going to end the stream there, guys. I hope everybody has a good rest of your weekend. As always, we'll post on Discord, like Johnny said, just super busy. So much is going on, so I can't always get to the streams. I was going to try doing something in Discord where I start posting some of my buys from the day and just kind of say what I liked, what I didn't like, what I got stopped out of, to hopefully kind of give you an idea of more live how it is. Now, obviously, not every day I can sit there and do this kind of stuff. It's actually rare that I can really pay attention like I wish I could. But yeah. It is what it is.
For sure. And yeah, let's see how this next week will be. Then I will try to be on Thursday, but like I said, in this I'm reading a lot. I'm checking things a lot, and you only have so much time, right?
Right. No, it's true. It's very true.
Yeah. All right. Good
All
stuff.
Right. Thank you, everybody.
See you then. Enjoy your weekend.
Have a good one.